Okay, well, I think we'll get started, and as people sort of trickle in, they'll just come. But hi, everybody. Thanks so much for coming to the event tonight. My name is Will. For those of you who don't know me, I'm one of the presidents of YAI, Yale Alternative Investments. We're delighted to have Kaushik Ravi with us tonight to speak. Just to give you a brief background on our organization, we were founded last year, the spring semester in January of 2020. We've since grown the group to around 16 members. The organization's focused on alternative investments, as is in the name. So mainly private equity, venture capital, hedge funds, and real estate. And basically what we're centered on doing is working with various, funds and other companies that are doing this type of work to sort of give us some project experience throughout the semester, develop closer ties with industry practitioners, for recruitment pipelines. And it's been a lot of fun this semester. We've got some great projects going that our members have been working on. But that's just a bit about us. And I'll hand it over to Felena to introduce our speaker for the night.
Thanks, Will. So today we have Kaushik, and we're super lucky to have him. And I'll turn it over to Kaushik to kick off the presentation.
Awesome. Thank you, Felena. Thank you, Will. Thanks for organizing this event. I'm super excited to speak to everyone. I think Felena will remember this. I was on campus last year about this time. We did a whole event, I think, on campus. So I think they've done a terrific job of sort of building this organization up. I think, as I reflect on my career journey, it could almost be like an up or down journey, not just to sort of learn about it, but also kind of come in. So I encourage everyone here to use, Will, Felena, and the team to really learn from each other. Yale and Elevate, which is an organization I started out, or have been able to become good partners over time. So I encourage you all to sort of pursue careers that you're obviously interested in, but also learn a lot about these careers. So today's discussion will spend some time talking about my journey into it. It wasn't sort of a straightforward journey. I frankly didn't know what I wanted to do. Definitely out of undergrad, I think. And so sort of a little bit about figuring some of that out. I think that's also thematic if you talk to other people who've kind of, had sort of successful paths, but oftentimes there's like a point where they're not sure what they want to do or what they're really good at. And so for me, it probably happened in my early 20s to just kind of accelerate, but I think for different people, it happens at different points in time. And maybe that's one other message, is sort of have patience and sort of, be willing to work on yourself to figure out what your interests are. Because even if you take something like investing, right? And we've had on speakers from all over the gamut, and I'll talk about Elevate, but I think, even within investing, you got to figure out, do you like the private side? Do you like the public side? Do you like the equity side? Do you like the credit side? Do you like, emerging markets? Do you like commodities? There's so much going on within even that realm. So your goal, if I give you it in your careers, is to sort of find those things that you're uniquely good at and then sort of can become the best at, right? So I think we'll maybe start there. I have a few slides. I do encourage, I'd say this is probably my 20th university I've spoken to this fall on Zoom. So I love, audience participation and stuff. So you guys feel free. Started my career at Goldman Sachs post U Chicago, where I went to grad school. And started as an associate. I was really fortunate. I think early on in my career, I got to work on what ended up being some of the largest deals ever in financial services, which is the industry I went into. So I get this question asked a lot of kind of all my students within Elevate, like, hey, how do I know what industry to go into, or what sort of roles and things like that. I always kind of say, I picked financial services to start my career because I was coming out after the last financial crisis. And so for me, I was like, hey, where can I go in where I can maximize my learning, really work on really good transactions, and then work with really smart people. And so I picked sort of financial services. Obviously, today's world, it's a little bit different. So there, I was really fortunate. I got to work on, I basically led the $100 billion divestiture of GE Capital, which is one of the largest deals ever in FIG. So I was the lead associate on that. I was also the lead associate on the $3 billion IPO of Synchrony, which was the largest IPO since Facebook. And then we split them off as another $20 billion deal. Again, one of the largest split off M&A deals. And then also led the $50 billion sell side of GE's US businesses. So within my first 3 years, I had so much incredible deal experience and sort of leading these transactions. And part of it is sort of your own making, right? I think my first year was just so at Goldman. I was pretty good. I wasn't great. I was sort of kind of just muddling along. And then I think I just sort of stepped up and was like, hey, can I work on some interesting things? And kind of the opportunity presented itself. And I just sort of got on these deals and just kind of crushed it after that, right? So I think sort of picking where you guys are going to be really successful. And I think that's another thing you should think about. And we'll talk about that in a second. As kind of Flynn also mentioned, I founded Elevate Career Network. So sort of Elevate is a platform that brings together sort of the professionals from my network, from our collective networks, from the top firms in the world, focused on, private equity, banking, VC, hedge funds, consulting as well. We've been featured by McKinsey. So I think sort of just bringing professionals from everywhere to sort of bridge the gap a little bit and help people get access to top professionals, but also learn and get resources, training, et cetera, from all these folks. So that's Elevate. Kind of on one side, partnered with top professionals from top 50 firms and growing. And then on the other side, premier finance groups like yourselves across 30 universities, at least now on the undergrad side. And I'm also partnered with all the top 10 MBAs, and we'll go into that. 4 main platforms: career advice. So this is like an on-demand career advice portal. So like kind of like what your career center should be or could be. I think sort of hear from professionals and get advice on any of these careers. We'll talk about that in a second. Networking. We're now sort of building this Connect networking platform, which I think some of you guys are already on, which basically connects students from all over different schools. Training, if people want to learn more, kind of training that's fully taught, the only training that's taught by actual professionals from top firms. And then recruiting, we're now working with a bunch of PE, VC, hedge funds to recruit talent, both from my MBAs as well as my undergrads. So I'll just give you kind of a brief overview. Like I mentioned, these are our partners, and these are sort of our partner schools. We're partnered with, I kind of spoken to most of these schools this fall virtually, but I think this is sort of in the Connect platform, you have the opportunity to meet all of these different students from all these different universities who might be going to the same funds and firms and banks and whatever that you're all going to or not. I think it's a way to kind of connect across the country. Maybe I'll start off, guys. What are the different fields within finance or sort of business? And then we'll cover investing. I think I want to spend a lot of time on investing. But, I think I'll use a data set of what I see, which is sort of 3,000 students every year across Elevate that are going to all these different careers, right? I think the most popular career for all my undergrads is investment banking by virtue of, and by the way, the right column has, if you guys want to learn more about these careers, those are all sessions with the professionals we've had on from those firms that you could reference on the Elevate website. I guess that's what that last column is. But I think, investment banking to me, obviously having started my career in it, it's a great place to start your career if you sort of aren't quite sure if you want to go into investing or what type of investing or you want to do advisory or whatever. Number one. I think number two, it's a great way to just sort of break into the industry, whereas some of these investing careers are a lot harder to sort of break in, I think, at the early level. So I'd say probably 40 to 50% of our students go into investment banking. Crux of the job at the junior level, I mean, generally the job is kind of client advisory and execution, but at the junior level, it's a lot about financial modeling, kind of financial analysis, building that skill set, as well as sort of digging into companies, industries, and getting a sense of that. You definitely get to work on complex deals, and the reason why I think a lot of people might go into this or think about going into this is in the period of sort of 2 years, you cover like this wide gamut of deals, and at any point in time, you could be on 4 or 5 deals, right? So I think you get to see a lot in a short period of time. And so I think that's one reason why it's super popular. As you progress, if you stay in it, I think, the goal is to develop more client relationships and clear deal execution, et cetera. The second big chunk of industries where a lot of our students go into, maybe 25 to 30% of our students go into private equity out of undergrad. I think the crux of the job here is investing, right? I think the difference between banking and private equity, very simply, in banking, you're an advisor. In private equity, you're an investor. So here, basically, you're not advising a company to do a deal or M&A or whatever. Instead, you are basically buying into that company in some capacity. Let's say you're a private equity investor, you're buying a majority stake in a company. Let's say you're a credit investor, you're buying sort of the debt of that company. So here the mindset's very different, right? So here you have to kind of go in, and this is what you'll get tested on in your interviews or even in your internships, is how well are you able to think about from an owner's hat, right? So if you were to own this company, like the first question I'll ask in interviews is, all right, like tell me an idea or interesting industry you're interested in, and then let's dive in and say, hey, will you invest in this company, and why not? And at what price, right? I think so. It's really important in my mind to sort of cover some of those bases. And here the really key is a couple things. One is you deep dive into industries and companies much more than you would in investment banking. So that's one thing to note. And then number two is to really find the right fit or fund, right? Whereas investment banking, I'd say a lot of the top banks or whatever are largely similar, and you get largely similar experiences. It's not true on the investing side. So I think that's another thing to sort of think about. And over time, the focus is to really focus on, I think the mega funds have have a reputation of being like banking 2.0, but I think generally the goal over time is to do less of that work, to do like less of just the financial work and more of operational work, kind of portfolio company work and things like that. That's at least the goal as you go up through the through to sort of associate to VP, principal, director, et cetera, right? So I think that's the goal there. Venture capital, I'd say maybe 10% of my students go into this. It's very popular recently. Sort of here, it's earlier stage and non-majority ownership, and definitely a tech bent, right? So we just did our VC training where I had on, I guess, 4 or so managing partners from a lot of the Silicon Valley funds. And I think one of the kind of key takeaways is just how much influx of ex-bankers they get into, they get resumes from, wanting to be venture capitalists. So I think there's just something to think about. Definitely sort of a state of the land type of thing. We'll talk, I think VC, very different, right? VC, there's a lot of pathways into VC. If you're coming from a banking pathway or something like that, I think that the easiest way route in is sort of to work at a large fund like a TCV or SoftBank, which do more growth equity. So sort of Series D, Series E, Series F, pre-IPO stuff. Much harder to get in seed and sort of Series A, B types of funds, but obviously there's exceptions. And also it really, I think they value sort of that operational understanding of businesses, whether it's from a startup side or an entrepreneurial side. So again, these are all just generalizations. We can dig into any of these. Public investing, I had on a bunch of speakers from like Citadel, Bridgewater, and KKR and so on. So if you guys are interested in some of these things, the public investing side is sort of a completely different ballgame than private. You have to really be okay with, like, you have to find an edge, right? 2 things, where information is public, right? So how do you sort of build that alpha? And then number 2, you have to be okay with not knowing why prices of something move, right? So I know for myself, I don't think I could do very well in that environment professionally, because as private equity investors, we sort of like to be in control, right? So it's just a different sort of mindset for you guys. And then I think the last thing I would say is consulting or corporate. So in this case, you're sort of, a lot of my students go into like consulting. So this is, again, a potential career path.
Got a question. How have you seen the pipelines for these industries change in the past couple of years in terms of what firms are looking for and what type of skills are becoming more or less important?
More recently, I've seen a lot of our private equity companies that work with us on the recruiting side, or with me or whatever, my contacts in the industry, or even us. I think we are valuing a lot of that operational expertise in that a consultant brings, right? So typically, if you're looking at private equity or growth equity, especially for the large shops, they almost exclusively only hired investment bankers. And the reason for that is we would say, hey, look, like this person has done X amount of reps. And so kind of coming in at the associate level, the first year or 2 is literally just cranking out deals, like going in a data room, building financial models, building investment case memos, and then rinse and repeat, right? And managing consultants, so sort of rinse and repeat, like the whole, and then managing the process over time, and then sort of docs and legal, and then managing the process, right? So we would really put the factor on, like, all right, we want someone, I said banking 2.0, and I kind of mean it, right? So sort of like, we want someone who can go in and just kind of execute. The challenge, I think, more recently, we had on someone from Centerbridge a couple weeks ago. We had on someone from, a couple other firms a couple weeks ago. I think one of the things we talked about was, look, I think we're kind of entering an era where sort of financial engineering was great in the last 8 years, where you could sort of lever up companies, kind of, take multiples up, and then sort of just come out and make a good amount of money. I think what's becoming more important going forward is that ability to look at an asset or look at a company and understand sort of what are the levers of operating leverage, right? What are the levers of sort of improvements that you can make strategically or operationally? So for that reason, I think whereas before maybe we'd say private equity would take 90% of the people from banking, today we're probably like 60 to 70% kind of banking, and then the remaining from sort of a top 5 consulting firm, right? That still said, I think whichever one you go into, my recommendation is sort of, if you go into the recruiting process, go eyes wide open into what your weaknesses are, right? So if you come from a banking background, your weakness is going to be operational understanding. So all of my questions in the interview, before you even get to the LBO, is all going to be around helping me understand how you think about this industry, how do you think about this competitor landscape, how do you think about, the strengths of this business, what do the other people do well, et cetera, et cetera. So I will exclusively focus our interviews when we talk to consulting people, banking people, on sort of the strategic element. When we talk to consulting people, we'll probably exclusively focus our interviews, not exclusively, but like 70% of the interview on, like, are they able to sort of crank out a financial model, and how do they think about the financial analysis? At the end of the day, they're both important. You make your own path. You know what I mean? Like, don't let me tell you that, like, this is the 70% option. I'm just giving you guys statistics that I see across all these students. Like, so for you, if you're really strongly enough, the people that are most successful, I had a couple students who went to sort of middle tier investment banks, right? So not like the top 5 or top 10, but they really knew that they wanted to do consumer private equity. So they like built up their own knowledge base of companies in that space, how they think about investing, et cetera. And then this year they're able to land sort of the top consumer companies out there because they're bringing that to the table. So my point is, like, at the end of the day, take the names out of the page. I think it's relevant. At some point, you got to stop chasing the names, and you got to sort of like go into things you're really, really interested and uniquely good at. And so that my challenge to you, sort of even more than consulting banking, I think that's important, but equally sort of figure out where in consulting and banking, do you like an industry? Do you like a sort of a subject area expertise? Do you like a deal side? Do you like the strategy side? And guaranteed, like unequivocally, I'd say you start identifying the things you like, and those are the things you'll be better at, rather than fitting yourself into one thing. I can speak about like for hours on this topic, but I'll try to like summarize it for you like this, based on sort of my lessons learned. The last thing I'll say on that topic, it's your first job. It's not like your, life, epitaph, right? So sort of just go for it, get the best job you can absolutely get, go sort of do your diligence about that job. But at every point, you're going to have to go and either become really good at that, or you'll have some sort of an exit option. So it's always like, where will you be and what are you going to use that platform to do, right? Is that helpful?
Yeah, it was awesome. Thanks.
Yeah, you got it.
I have a question I'm curious about. I'm Alex, by the way. So one thing I'm curious about, if you have any advice, is say that out of college you find like a niche buy side opportunity with like a small private equity firm or something along those lines. Do you have any comments about maybe like specializing too soon, or like say you go into like a really niche shop that's very small, and like maybe they give you a great opportunity and you'll learn a lot, but like after that, say you do that a couple years and you want to switch to maybe like a mega fund, or maybe you want to, do something like that. Like, do you have any advice about, maybe you're specializing too soon and you might be limiting yourself on like transferring to another opportunity?
By the way, feel free to continue to post questions in the chat for everyone just throughout the entire session. And, Kaushik can take them when he's ready, or we can take them at the end. But if there's stuff that's coming up, feel free to just post in the chat. And I would encourage you all to fill out the spreadsheet, sign up your names, and stay connected with Elevate after, just after the event, because they offer a lot of great stuff. I think, Kaushik was kind of talking about the Finect platform earlier, but so I signed up about a week ago. And basically what it does is it connects you with, students in other finance groups or students interested in finance across, other type of universities like Princeton or Harvard or Duke or things like that. And so I was connected with a kid at Duke. We hopped on Zoom, and it was just a lot of fun to, get to know someone at another university with a similar interested in like a similar industry, similar subgroup within that industry. We're going to be heading to the same firm this summer. So it provides a great chance to just build some, connections that might be valuable for summer, might be valuable later down the line, but nonetheless will be incredibly interesting. So we'll give Kaushik, are you good?
About that. Yeah. So Alex, it's a really good question. And it's a really good question. I think about this a lot, right? Specialization. So I sort of went into an industry, which is one of the more specialization. I'll give you a couple different views of specialization on this. There's a view of specialization that, yeah, if you specialize too soon or too early in your career, you sort of close off optionality sort of going forward, right? So you say, hey, if you go to like oil and gas, or if you go to financial services or in financial institutions, or even healthcare these days is very specialized, you sort of, your kind of next best option, it's maybe not like maybe TMT or CRG where you can kind of go into other things, right? So my views on this is yes and no. So I'll answer your PE specialization question in a second, but maybe let's start with industry specialization. I think my view is like you're probably picking that industry, or you're thinking about going to that industry because there's some inherent nature, that you like about it. So if anything, I kind of take the flip view of specialization. Like, first of all, it's really hard to convince someone that you've specialized in anything 2 years into your career, right? So I kind of say that to start. But I think more importantly, like, you actually should use that to your advantage. Like, let's say you pick an industry you like and you sort of go into it. Absolutely, I think you should sort of use that to your advantage. Like, a lot of my FIG analysts would go on to, they sort of placed at funds that are financial services focused. So like, the large side, like Apollo, Centerbridge, Blackstone, et cetera. But I think on the middle market side, there's a lot of groups that do that. There's also 50% of the people who are in FIG that placed in generalist programs. So I think it's as much as you can sort of use the process to do what you want. But to your question on sort of going into a small fund, look, I think when you think about that, there's always a risk / reward for anything that you do, right? So I think my view on that is sort of assess that risk of sort of joining that fund, assess the viability of it, assess sort of the experience that you're gonna get. By no means is it a bad decision, because like I said, if it was the worst decision in the world and you did it for 2 years, you'll still recover. Like it's not that, don't put that much pressure on yourself. But I think the one thing I don't want you to lose is the opportunity cost of those 2 years, right? I think 2 years in your 20s is important. Like it's important to figure out what you want to do, who you want to work with, where you want to build a relationship. So if anything, even more than a platform or a brand name, I think it's actually the relationships that you build early on. So I always encourage people, like, go to places where that can be that, step up for you in networking. Like if you go like to a BAML or an Evercore or a Goldman, I think you have the opportunity, or McKinsey, to build with a class of people who are all going to do great things, right? So I think there's that element as well. But if you go to a smaller fund, like, know kind of going in what the pros are. You're going to get a lot of really good reps. You're going to get a lot of really good deal experiences that your peers are going to, some of the bigger banks or funds may not be getting. You're going to get a lot of responsibility. You're going to get a lot of entrepreneurial nature. So those are my 4 pros for you, if that is what you're doing. Your cons are going to be, one, maybe slighter discount on the brand name, maybe slighter discount on the network that you build, maybe higher risk, right? That this thing isn't sort of, the platform doesn't end up doing great or whatever. And then number 4, which is a more diligence point, is, do you like the team that you're going to start? Because I think in private equity or investing, especially as it becomes middle market, smaller groups, the people you work with sort of make or break your experience and your sort of your career path, right? In other words, you can always recover. If there's one thing you take out of this call, like, is do the best you can, but you can always recover. You can always kind of keep going at it. But I think you always want to do the right thing and kind of go in with kind of the foresight. So I'd say, look, those are the pros and cons to me. Like, I laid out the pros, I laid out the cons of sort of going in and doing that. You could always transition to anything. Look, I think it may be a little bit more hard, more challenging if the firm you go to sort of isn't doing great, and then you want to sort of make the switch. But I think if that's what, there's no faulting anyone in sort of doing that. So I guess I don't have, my view on that is, like, if that's, when you've laid out the pros and cons and you still are like, hey, based on what I know, this is what I want to do, then go for it. Know that, yes, there may be a chance that you may be on the market in a couple of years. There also may be a chance that this fund does really well and you sort of make associate and principal before anyone else, right? So I think there's a lot of that. And PE, there's a lot of transferable skills, right? You're sort of at the junior level, you're building models, getting good deal. And I'll talk to you about what I think you need to do to diligence a firm if people want to talk about that. But I think, the deal experience, the kind of financial analysis, the diligence that you're doing, the processes, they're pretty similar across the board. So at least you'll get all that experience, maybe some industry focus, et cetera. So I think there's sort of, if you have a specific question, I can address it offline, but I think that's just sort of my general views on specialization, industry or otherwise, and then sort of large versus small fund to start your career. Is that helpful?
Yeah, that's perfect. Thank you.
Okay, yeah, you got it, Alex. My views on recruiting is as follows, right? So one thing is control what you can control, right? And sort of one thing is the biggest thing you guys can control at any point is the knowledge base that you build, as well as your own like level of interest / diligence that you can do. So whether you go forward and it's a really good question. I'll get to the crux of the question in a second. But first thing I'll say is, if this is something of interest to you or of importance, I would just challenge you all to really like build that knowledge base when you can, like now, right? So exactly what this club is doing, like research into sort of all the different types of funds you're talking about. Do you like the large funds? Do you like the nature of the work there? Do you like sort of the middle market type funds? What is the type of work that they do? Do you like the public side? Do you like the private side? Do you like the debt side? Do you like the equity side? So the biggest thing you can do, whether you decide to go through the recruiting or not on an on-cycle basis, is sort of arm yourself with everything that you want to know, such that you can make a good decision. Because how recruiting works, and sort of, we've had it on all over the Elevate platform, as well as in all the private equity trainings that we have. But like when for people in your shoes who are kind of going through it on cycle or off cycle, it happens very quickly, right? So this year, it's probably not happening in the fall, which is not even relevant for you guys, but prior years, it's happened very early, right? So my point there would be, after you've gathered, my view from years past has been about 50% of the people go through on-cycle recruiting because of a function of it being too early. I think, it happens like that quickly. And so a lot of people haven't made that determination. But let it not be because you don't have enough information. Let it be such that you've assessed that information and you feel like you're not ready to go into this now, right? So that's the distinction I'm sort of trying to make. Because I do know a lot of people that went in saying, oh my God, it caught me by surprise. And I'm like, well, at least if you're in this discussion, you know all these resources are out there on the Elevate platform, you can go look at it, but just more broadly. The second question I'd say is, yeah, I think there's sort of some, look, I'll say this, your banking or consulting years, the first, or PE, if that's what you go into, the first 2 years out of college are gonna be the toughest years, maybe until you get to principal, because I think private equity principal is also, I think that is the hardest job in the industry, but let's just say your couple of years as an analyst is gonna be the hardest thing you would have done, because it's your first experience like to a real job, right? And it's sort of like, you're now put like into this thing where every day you're meeting with the CEO and you're like have to do all these materials that goes to the CEO of a company, right? So I think it's just inherently a little more stressful. So that ends up, I think, affecting people's mindset of being like, look, I just want a GTFO. Like, I just want to leave this place. Like, this is too intense, whatever. But I would argue that if you're a lawyer, your first 2 years are really tough. You know, if you're whatever, your doctor, it's really tough. So my point is just that kind of bifurcate a little bit from the job itself and what the job is versus you being the most junior person where literally everything flows downstream to you, right? So I think bifurcate that a little bit to your point on seeing if the banking thing works out. If you generally tend to have FOMO and you're like, hey, I'm going to really like kick myself for not going through this, maybe you should kind of consider going through it, right? So I think there's a lot of factors here. I don't think, I think firms have also adjusted, right? I'd say most firms go through the on cycle and then they come back and do sort of another maybe third to, 2/5 round off cycle in the next year. And there's a lot of opportunities open up. So my thing on this point is, look, when you're ready to go into private equity, there will be ample opportunities to go in. So whether if you don't go through the on cycle and you kind of go offline, there's just too many funds are raising capital now. And I'm getting pinged like on a weekly basis on sort of need for talent in this space. So I would just say, do it when you're ready, but do it sort of do your diligence. This is what I tell all our analysts. Like if we're going to do a deal or not, let's do all the diligence that we possibly can such that we can sort of be in position to do it and then make a call. And look, sure, it may be the right call, maybe the wrong call, but at least be confident that you got all the information to make that call. So I would say that the specific answer to your question, Fasto, is going to depend on, your particular state of mind and what you want to do. Don't do it though for the sake of, hey, Will is doing it or Felina is doing it or Fasto is doing it, right? It's going to do it if it's right for you and do it to the right place that, sort of you want to go to, right? I'd say because these things happen in a week usually or a couple weeks and sort of the dominoes fall. And then now, not only, if you weren't sure if you want to go into finance or banking, you're going there for 2 years. Now you're tied up for another 2 years. So by the time you see the light at the end of the tunnel, 4 years from now, you sure you want to be doing this? It's your point on growth equity and all this. I have a bunch of our analysts who went into growth. We're going to try to get a few growth guys on and gals on for the platform, BC. Just sort of figure out if that's for you. Again, use the Yale group here, which is a fantastic group for alt investing, to figure that out. But yeah, those are my general stance on PE recruiting and on private equity concepts. So let's do that. First thing I'll say, look, for those who are not familiar with the PE, I've already mentioned there's a ton of resources on our platform to do that. But generally, right, in my mind, it's just kind of at a fundamental level, what is private equity? It's the idea of investing in companies or businesses to be sort of a medium-term owner, such that you could kind of improve the company in some element, right, operationally, financially, growth, et cetera, in order to sort of gain sort of alpha-like returns that you can then sort of return capital to your LPs to do that, right? So I think people invest in private equity firms to sort of gain outsized returns. And the way we do that is by being very hands-on, operational in our diligence. And that's essentially what the nature of their job is, right? So as I think about private equity, I always sort of start defining it by sort of 3 or 4 elements. So beyond the firms itself, what types of companies are you interested in, right? Are you interested in sort of doing the large versus like, the middle market company, that sort of makes widgets down the street that sort of is $100 million EBITDA and you want to sort of do a deal. So a little bit about the size is important. The reason the size is important, it sort of affects the nature of the work in private equity. So large deals, they're complex, but they don't go as deep. Like you're not out there like diligencing every there was the Dunkin' Donuts just got done. Like you're not going to every single Dunkin' Donuts and like inspecting those stores, right? But if it was a smaller deal, maybe you go to every single store and figure out like what are the operations like. So a little bit about how much and what type of diligence you want to do and what types of deals and sizes you want to work on. So that's the first thing. Number 2, valuation, right? So I bring this up because valuation really drives a lot of And you guys might not appreciate it today, but maybe 5 years from now, if you look back at the presentation, I think you'll see it. Kind of think about where we're on the valuation cycle, right? So we're sort of, again, for one reason or another, maybe some of you can explain this to me, but we're sort of at all-time highs, sort of in the public markets, right? So if you think about investing in private equity today, you would go in and say, okay, in 5 years from now, do I think these valuations will hold or even be higher? And if so, then let me join the type of company that'll kind of do that. Or the last point here on operations, right? I brought this up earlier. Like the best we could do in investment committee or investment cases now is think the valuation will hold. I don't know, 5 years from now, it may not hold, right? So what are the levers that PE can really add here? I think that's just something that you guys should think about as you think about career decisions. So I almost think like looking at private credit or, things like that are equally interesting in this point in time that we are now. Equally important sort of leverage. Again, leverage is important in private equity because one thing I didn't mention earlier is when you do these transactions, you fund them, right, by a combination of equity and debt. And so when we say leverage, we mean the amount of debt that you can take on. The equity part's important because that's how much money you're putting out as a sponsor or a private equity firm. But the leverage part's important because it's like buying a mortgage, right? You buy a house, you only need to pay 20% down. The bank is sort of paying the other 80% for you, right? So leverage really amplifies returns. And so it's important to kind of think about that concept as you think about private equity and sort of, as a driver of value. And finally, growth is another big driver of value because, short of valuations going up or whatever, I think the underlying growth in the company is really important. The way that most people think about growth is, all right, how can we take our portfolio company and sort of go into new markets, go into new products, bolt on new acquisitions, or, whatever the different channels of growth are. That's just something increasingly thinking about in private equity because the financial leverage and metrics are no longer just going to make your returns, right? So that's just something to think about. Number two, the other thing to I'll talk about is sort of day-to-day roles of a pre-MBA associate. And we may not get to when I do these talks to post-MBAs, we'll talk about the post-MBA role. But the pre-MBA associate role is squarely that of an analyst and sort of a senior analyst or a junior associate. You're not doing as much. And so even stepping back, there's sort of four main roles in private equity. One is sourcing, which is new companies and how do you attract new companies. Number two is thesis development or idea generation. How do you develop new ideas and investing teams to work on? Number three is transaction execution, which is when you're doing a deal, how do you execute the deal? And then number four is portfolio company management. As a pre-MBA associate or a post-undergrad analyst associate, you're spending the majority of time in this area, transaction execution. You're basically helping the team consummate a transaction, building the financial modeling, going through the data room, sort of doing all the diligence, going through legal docs, negotiating NDAs, and et cetera, right? So I think majority of your transactions or your time is focused on that. That said, if you sort of go into a smaller firm, maybe over the course of your first couple of years, you'll get to do more portfolio management or sourcing or idea generation, sort of depends on the firm that you go to. And then the third big concept is sort of recruiting to private equity, which is its own big concept. But I think things I want you guys to think about, different types of funds, what is interesting to you, what are the things you're attracted to, and also where does your background kind of lead you, right? It's a little more challenging to come from like a boutique, kind of small middle market investment bank and then go to some other fund or the other way, right? So I think sort of figure out where you're uniquely positioned and then sort of diligence, sort of people culture, track record is really important. I think it's even more important, probably more important for my MBAs or sort of later on, but even at the early stage, really diligencing how the firm has done, how the fund has done in the last few rounds, few fundraisers, et cetera, really, really important. And then finally aligning your strengths, right? If you are more operationally focused, go to an operational fund. If you're more transactionally focused, go to a transactional fund. So I think some of this work that you guys can do, competitive recruiting process, I have a slide on kind of what we are looking for and sort of the private equity recruiting process, which I'll get to in a second. But it's everything, right? It's sort of everything and above, and I'll talk to you about it in a little bit, kind of what I mean by that. And then career trajectory, right? So a lot of people, I'd say, go into private equity and maybe 50% of the people decide that it's not for them or it's sort of they're not what they want to do, which is fine. And then another 50% kind of want to do it. Typically still a lot of firms require sort of that MBA, at least now, still to sort of get to that principal level, depending on the type of firm, but that's what I've usually seen. And then when you get to the principal level, you're now in charge of bringing in deals and also executing on the transaction and also managing the portfolio. So when I say that's the most challenging job in the industry, that's kind of what I mean. You're responsible for the deal. So everything that goes right or wrong in the deal kind of falls on you. Everything sort of sourcing, you're expected to bring in all the ideas and opportunities. So you're sort of talking to all the bankers and everyone in the street. and then you're sort of also sitting on boards and managing kind of portfolio companies. So that's sort of the gamut of responsibility as a principal. We look for in private equity recruiting, what firms look for, it's 4 things, right? So one is execution ability. And we talked about this with Sean's question earlier. Whatever you've done before, whether it's consulting, whether it's banking, whether it's operations, can you prove or can you exhibit to us that you have the ability to sort of execute transactions that are complex? And that sort of means like, can you be that jack of all trades, Jill of all trades, and do sort of everything required to execute these complex transactions? When you join sort of a lot of these funds, you're not going to have these like 5 weeks of training programs and stuff. You hit the ground running like day one, right? So you are expected to sort of go in and take charge of these things. And we'll talk about sort of how to think about it. The second thing is analytical ability. I think the way we sort of test for this is sort of spend time on, hey, what deals have you worked on? What projects have you worked on? What have you done on them? What was the result of the analysis that you did? How would you think about X, Y, and Z? You know, how would you think about this? You know, LBOs, like, you know, paper LBOs, things of that nature, which is again, can they handle some of the analytical components of the job with sort of good judgment? I'll come back to judgment in a second. Investor mindset. Again, this is another thing which is harder to quantify, but it's something we definitely look for in interviews across the board, is how well does this candidate demonstrate the ability to take that investor mindset, right? So can you take a view on a company, industry, or assets, and then drive that to an investment decision? Because ultimately, you will be on the investment team that takes anything to investment committee. How do you think about an investing idea, a company, an industry, et cetera, that helps you become a better investor? And then finally, I kind of talk about this already, but sort of the personality fit, super important. It's not something to take lightly, because it is sort of where you'll be spending a lot of time in small teams on, so super important. And that is an area that I would say all final rounds. I remember when I was interviewing for GS and other mega funds, like the last round, I talked for 40 minutes, kid you not, with every single one of the 15 partners that were there. So it was sort of like, you know, you have like one strike in 15 shots, right? So my point is like the fit portion is just so important, because people, like, we don't want to get that decision wrong, because you are driving so much of the value for the firm. So I just kind of give that anecdote as sort of an interesting example. I think I do get this question asked a lot. It a little bit depends on you. Like, do you sort of feel like you need a very formalized training ground / like credentialization or whatever for a couple of years where you kind of do a lot of deals? Or are you sort of generally comfortable saying, hey, I can go and figure this out for a couple of years and sort of do it? So that's probably number one. Number two is, are you like, have you made up your mind that investing is what you want to do, right? So, and I think a lot of people think that's the answer, and then they go do it and they're like, oh my God, this is sort of like really how hard. And it's hard to sort of then do that. And then I think the exit ops from out of PE sort of aren't as robust as maybe out of banking. It's just a thought, right? Something to think about. And so I would say everyone says they want to do it, but I'm not sure that everyone, look, if everyone was in PE, then like there would, you know, half of the people wouldn't be that good. So my point is, you know, you have to kind of figure out if you're good at it, if you like it, et cetera. So that's probably the second point. And the third point is, look, if both of those things check out and say, hey, look, I don't need that formalized training ground, and I think I really want to do it, my advice maybe just go for it. You know, if there's sort of that fund and firm fit works out, absolutely go for it. Sort of why delay the inevitable? But also know going in, there's trade-offs, right? If you sort of, depending on the firm you go, there's more risks that we talked about in sort of startup risk, in terms of like career risk. It's not huge, but there's definitely there. And there's also more people risk. Like at least in banking, if you don't like someone, you sort of go to rotate to a different team. Like in PE, you're kind of stuck with that person. So sort of, you know, you have to sort of make that decision. And then I think, yeah, I think the other thing is just sort of continuing to build your portfolio. You will probably do like 5 to 10 deals a year in banking, or at least work on. And in private equity, maybe you do 1 to 2 deals. So I think that's another thing where you go really deep. But if you really want the breadth of experience in transaction industries, maybe you want to go into banking. So I guess my point is, it's not as cut and dry, unless you know for sure after having diligence, maybe those 3 or 4 points. But maybe if you haven't, you can go. There's no wrong answer. And I would venture to say, even after your first 4 years, you're still sort of figuring out, like even 50% of those people eventually even stay in it, right? A, because it's super competitive to make principal, but B, because you sort of realize, hey, I really just want to start a company. I really just want to do something on my own. I want more economics. I don't want to go sort of be on a partner track that gets me something, you know, 15 years from now, 10 years from now. I want to go do it now, where I have this really interesting idea that I want to make an impact on. So I would just say, if anything, another thing you take away from this call, sort of continue to listen to yourself and the things that are actually really exciting to you. That's not going to be interesting and exciting to the person next to you it's going to be unique to you, right? So what is it that you define as success? Like, what is it that you define as impact? What is that you define as sort of what you want to spend your time on? I do a lot of MBAs, kind of blue chip bank, blue chip fund, come to an MBA, top 3 MBA school. And then people are still lost. They're like, hey, I don't know what I need to do with I just sort of accumulated a bunch of names, which is worthless because I don't really want to go. It's not worthless, but it's sort of not worth anything to me now because I want to do something else. So I just say I've kind of talked to the whole gamut. So I think that's, at the end of the day, it just comes back to you. But to answer your question, at any point in time, if I ask those people, hey, would you go back and turn down your mega fund offer? They would say no, because, you kind of, it's hard to do that. So I would just say, go in, weigh the pros and cons, and then sort of make the best decision. And nothing is permanent, but also time is important. So it's this dichotomy, right? So you want to, there's no, wrong thing by taking a wrong choice in your career, but also when you know what you want to do, sort of go at it because life is short. So that's maybe the dichotomy that I would present to you guys in a lot of these questions.
All right, I just have a general question.
Yeah, Luca.
What value would you see in pursuing an MBA, and what's a good place in your career to actually go for an MBA?
Great question. If you ask me this 4 years from now, I think I'll have a very different answer, but let's just take today. I think, look, one is, I think the network is just fantastic, right? I think you have, I think Yale does the same. Your school, whatever school it is, if it's a top 10 school or a top 50 school, your network's only as good as how well you cultivate it, right? So I'd say, you can go to, the best school in the world, but if you don't meet anyone or sort of don't go out and sort of do things, then it's not really useful, right? So my point is, I think with the MBA, the first thing I would say is sort of leverage it allows the ability to kind of leverage your networks. And so that's one thing, but it's cumbersome to pay $250,000 to sort of build a network, right? So let's maybe say that. So I think like the practical reasons of going to get an MBA, I'd say one is if you are looking to career switch. So if you decide, look, hey, I've been in finance for 3 years, 4 years, and I'll tell you guys this story. So I didn't actually start my career in finance. I actually had a banking job, but coming out of the last crisis, literally they rescinded it. And I'm sure it's happening now to people. So I completely feel for you guys. So I was bummed. I was like distraught because the one job, I went to a non-target undergrad. I was moved to this country when I was 10. So I didn't know anything about finance. I sort of got this job, worked, through college to get it. And then senior year comes about and I lost it. And so I was like, oh crap, like this is it. Like I've just sort of all the things I worked hard towards to get, right? So what I did was like, all right, well, this is not gonna, let's just try to get something. And so I ended up going to consulting, which was great for me looking back. But then I went to consulting, I think knowing like, hey, I want to get back into sort of the transactional side. So I got my MBA pretty early on. I was lucky. I went to Chicago when I was 22. So very early, because I knew kind of what I wanted to do. I was 22, 23. So I got in, probably one of the youngest kids in my class, which I was fine with, I guess. So my point is, for me, it was about career switching. So that's sort of the first reason to kind of go into it, because I went to consulting. I was like, hey, I like consulting, but I want to do something else. The second big reason is if you need it for your job, like a lot of jobs, like, to make principal or sort of director or whatever, principal or VP, you need it, right? So I think if you need to go do that. I think number 3 is, I'm being very generalist here, but if you want to go start your own thing or kind of be entrepreneurial. So I think devoid of those 3 things, you have to sort of figure out why you're getting an MBA. It could be, hey, I want to break. A lot of people go do that. I want to meet other people. I think that's fine, but be damn well sure when you go to an MBA sort of what you want to get out of it, because the 2 years go by really quickly. So I think you got to have a purpose. So in my mind, those 3 reasons probably still hold for an MBA. Frankly, like if you can build that network on your own a little bit and sort of get in, and you guys already have a strong, undergrad brand name, I'm not sure a lot of you will need it. I think if you feel like it's delaying your raison d'etre, or however they call it, kind of mission of life, then I think, go for it. You don't need to go get an MBA just because everyone else is getting an MBA, but also kind of know that 2 years also has an option value of kind of opening up all these different options. But again, it's only as useful as what you make of it. I know people who went to people in Elevate who go to all the top MBAs come from very kind of average backgrounds, end up getting great jobs because they just work at it. And people who come from great backgrounds end up getting marginal jobs because they didn't work at it. So it's sort of, again, what you make of it. The network becomes even more important at the MBA than even an undergrad, because a lot of firms come in, I think, recruit people on undergrad, whereas in the MBA, you sort of kind of do it a lot of it on your own. So I'm actually, I'm sort of neutral on the MBA. I think it helps you. For you guys, I would say, look, at the least, maybe you want to think about either, I know a lot of my students in Elevate now are doing the 2+2 program. So I think it's an optionality that you guys can look into. Again, it's still early. I would say if at least maybe take your GMAT and figure out, but I would say sort of postpone that until you have one job and see kind of what the MBA would do for you before you make a decision one way or the other, because it'll just open your eyes a little bit to sort of what you're looking for and whatnot. I'll say also, like, a lot of my own analysts are now at the top MBA schools not pursuing their MBA. So I'm just saying I'm neutral. I'm not positive or I'm not negative. It's just at the end of the day, I think it depends on, you and what are you going to make out of it? Like Yale, like in high school, you guys thought, hey, I want to go to the top school. This is it. Like, this is this thing I'm working towards. And if I get into Yale, I'm good. My life is great. I'm going to be on this track, whatever. Reality hits, you've got, guess what, 60 more years at least of your career, right? So 40 years, 30 years, hopefully less. But I think my point is, you sort of, there's things to do. So nothing's granted. We work with the top, I'm at, HBS, Wharton, Stanford, all those schools. And there's still that sort of yearning to figure out what is your true sort of mission and end goal. And so I'd say it's a lifelong journey. And if an MBA helps you do that, great. I don't think it's for everyone. So that's my kind of short, long answer to that question.
Thank you so much.
Yeah, you got it, Luca. So I think the goal is to democratize access and also provide better accessibility to what I know are black box careers. So I think that's the ultimate goal here. So that's one thing. And then sort of build and develop your own networks, folks, because I think that's maybe the best thing you could do early on that I wish I'd done more of, right? You have this amazing network that you're a part of with this group, with other groups on campus, with your larger community, with your alumni. You have a great business school attached to you. So sort of, challenge yourself to Zoom meet 3 to 4 new people a month, right? And sort of see where that takes you. I think it'll take you to great places. So
I have a quick question, and let me know if I disconnect here. My connection's a bit unstable, but this question's targeted more towards anybody looking towards more small VCs and PEs, more off-cycle shops, more towards the boutique side, where things aren't as structured and recruiting isn't as clear-cut. What are your tips towards anybody that's interested in a firm like this and the best way to kind of get your foot in the door?
Great question. I'll give you sort of my couple-minute answer to this. If that was the message I got on email, I'll say, hey, Nico, let's set up a phone call. The first question I'll ask you is like, why are you interested in this sort of niche in this space? So first thing to be like answering that question, because I mean, I'm sure you have an answer, but I think, sort of like, first thing is like understanding sort of what about that space is really interesting to you, and let it not be that, hey, this other thing is not what I want to do, but like, we should focus on why you're interested in that. But more broadly, where the make or breaks in this kind of smaller growth VC PE happens is really in connecting with people. Because to your point, the recruiting is so haphazard, right? I get inbounds from we're working on a couple of these recruiting jobs now on the Elevate side, but I think I get inbounds from my network saying, hey, we're looking for X, Y, and Z candidate, or sort of they sort of try to go find someone. So, but they don't largely like post these things around or whatever, because they don't have the infrastructure to handle like 100 applications or even like whatever. So it's a little bit about finding sort of that candidate that is exhibiting sort of, is this someone we've been tracking for a while? Do they exhibit X, Y, and Z? And sort of, are they someone we want to have an interview with? So guaranteed, like there's a small P, lower middle market kind of early stage PE firm that's sort of working with Elevate to help find candidates, not undergrad, sort of more experience. And they're like, hey, we want, go out to people, but we want to interview 20 people or whatever. So they don't want 100 resumes, right? So I think for a little bit is about finding that right person. The second thing is, I think this is actually the most important thing, communicating your value. Like the biggest thing for a VC or kind of small PE is what I want you guys to do, go on their website, go into their portfolio, understand and look at every single portfolio company. And they're small VC, they're not going to have more than 5 portfolio companies or 10 portfolio companies. So go in there and sort of understand what every single one of them does. And more importantly than that, what would you say as a couple takeaways from what they do? Hey, this company does direct to consumer marketing X, Y, and Z. What have you guys thought about these channels? How do they use this? Whatever. So the biggest thing I think where candidates really differentiate themselves, I'd say this to my MBAs, I say this to my undergrads, I say to my, current banking analysts or consultants, is like, how much preparation / value are you adding? Because I think at the end of the day, a smaller firm, they're not hiring 10 associates, they're hiring 1 associate. And they want that associate to sort of be Jack, Jill of all trades, but they also want them to add value, right? Especially in VC, it's what you don't see. Like, it's not like even PE where, hey, I know I've done this deal before. We're just going to add leverage. We're going to do this, et cetera. VC, you got to be able to see things that, trends in market, et cetera, that other people don't see. So the best way to exhibit that is sort of say, hey, I look at your portfolio of assets. This is what I think you do well. This is where I think you guys can improve on. I've done this research and this is the value I can add. Boom, that's going to get you a final round interview. So I just think find out where you guys can add value. And then sort of say, hey, I've done work in this space. And I think a lot of my students also ask me this, hey, how do I even get a foot in the door, right? Your question is a little bit different. Like, how do you sort of approach the thing? I would even take it as far back as saying, how do you get a foot in the door? How do you get the VC to respond to you, right? Number one, understand everything you possibly can about VC before you reach out to VCs. Like people I know, and people have, we've talked about this, sort of aren't able to distinguish in my mind between PE and VC. So for one thing would be like understanding what it is you're getting yourself into. Number two, understand what you know about that particular person. And your outreach should be one that communicates value. Even before you ask for jobs, even before you ask for something, you should say, hey, I'm really interested in the VC space. I really like your fund for X, Y, and Z reasons. This is my background. I've been studying X, Y, and Z. I studied consumer retail. I noticed you've invested 5 companies in consumer retail space. I've looked at your portfolio. These are my couple ideas. These are a couple companies at Yale, entrepreneurship, where startups are doing that. I'm happy to give you an intro. Also, I'm happy to discuss some of these thoughts that I have about this. That is guaranteed to get your response 70 to 80% of your time versus you just saying, hey, I noticed you're a Yale alum. I'm looking at VC. I'd love to get on the phone with you. They're going to be like, okay, this is the 75th Yale alum that's reached out to me this month, right? So like, or student, right? I'm not going to respond to this email, right? So I think just anywhere you can communicate value, and sort of, do show that you care, right? And so while it may take a little bit longer to write that email, guarantee you it's going to have 3 to 4 to 5 times a better response rate than the first email. So I think both on the outreach part and also on sort of the connectivity part, the small middle market side, look, it's haphazard. I would say like make a list of things you like, go plan A, plan B, and sort of reach out to a lot of places. Because a lot of firms will say, hey, I really like your background, but look, you know what? We're 10 people. We're not really hiring right now. Or, hey, we only hire someone who's worked at a startup, or we only kind of do this. So if you have 10 conversations, you may get 1 answer. If you have 50 conversations, you may get 5 things, and that's 5 is always better than 1. So my point, maybe my last point on this one is sort of spread a wide net. So add value, sort of, be proactive, spread a wide net, and all the other things I might have said, in the prior answers. I think that's sort of my tips for that particular question, Nico.
That's great, Kaushik. Thanks.
Yeah, you got it. This is great. I kind of encourage everyone to check out all the resources that I pointed you guys to, and definitely this group, I think, a lot of great initiatives. I think you guys have amazing connectivities and a lot of experience from the senior folks who are kind of leading it. So I highly encourage you. And I know Will, and I've gotten to know Will and Philina pretty well, and I think they're fantastic leaders. So you guys should definitely connect and be part of this group, and take leadership. I think, well, that's the last thing, right? We would get 300 resumes from any school. And people always ask me like, hey, how do you make like the first cut onto 30, 300 down to 30? Because that's how many people we could take from any particular school, right? So I think my line of, and this is having seen, X thousand resumes, I think we always sort of, we do 2 things. One is we go out to our recruiting team, so the Yale recruiting team or the alums in the network, and say, hey, has anyone met this person? If someone's met this person, what's been your impression on this person? And if it's positive, guess what? We probably won't look at your resume even, right? Or if you've had a Zoom session, it's been great. I'm not looking at your resume because I don't need that noise, and I don't need to spend another 90 seconds looking at another resume, right? So if it's been a positive reaction, then we're going to move you along. So I think the one thing is sort of networking is important. Networking is relevant. Networking is critical. And maybe even so after you have jobs, right? So I kind of say that. The other thing that stands out in the resume is if I see people who are like, hey, I was leading this group, or I was kind of board of this thing, that automatically differentiates you guys from, not your peers, because it is, but everyone else in the pool, right? And then in the interview, I'll ask you like, what were the challenges you had as a leader to this group? That guarantee is a more interesting question for me to ask than asking you what a DCF is, right? So I think you guys just note that we want to hire people who are ambitious, passionate leaders, want to make an impact, et cetera, because that reflects on the job. So my point is, get involved, get on things like this, do good things, and it'll kind of show up in the results. So okay, so excellent. So that's all I got. So thank you guys for staying on and asking such great questions, and look forward to being in touch with everyone.
Thank you so much, Kaushik. You've been such a good sport hopping on Zoom. I know there are often technical difficulties, but really appreciate you hopping on. And I can tell your passion for mentorship is really genuine. So I'm sure everyone else can too. And we really appreciate you.
Thank you guys for having me as always. And yeah, we'll be back in New Haven in the next year this time. But hopefully we all are. But okay, cool. So best of luck, folks. Talk to you soon.
Great.
Yeah.
And I encourage everyone
Thank you.
to sign up for, check out Elevate, like sign up for emails. Like it's great. Like getting to see what a partner says to, why this firm or how do you look at a career is something that you can't really find elsewhere. So would really encourage you guys to go check it out.
Well,
Sign up for the newsletter, everybody.
Thanks, Belena. Thanks, guys. Have a good one. All right.